Hello and welcome to Switzer Super TV. I'm Peter Switzer. This is my colleague Paul Rickard.
Hello, Peter.
Now, Paul, what are these hybrid securities? People are really interested in them. So, what are they? How do they fit into your portfolio, and what's happening now?
Well, as the name implies, Peter, a hybrid security is a mix. It's a cross between a debt security in the sense it pays an interest or distribution on a fixed amount on a fixed date, and also has equity-like features in the sense that in many cases they might convert back into ordinary shares.
Now, you like bank hybrids, so tell us the two types.
Well, there are two types of bank hybrids. There's the capital note issue or preference share issues. There are also some subordinated notes. Let's deal with the capital note issues, which are called capital notes largely because they qualify for banks' Tier 1 capital. They pay a distribution of a fixed amount on a particular date, but that distribution is not guaranteed. And if it isn't paid, Peter, it doesn't accrue. Also, typically after 8 years, the bank has a right to redeem the note. But in some cases, if the bank doesn't, then they'll convert back into ordinary shares after a period of 10 years. Perhaps more importantly, they carry two triggers, both to do with the capital of the bank. One's called both a capital trigger, the other's called a non-viability trigger. And essentially what that means, if the bank gets into some sort of problem, either it tests a capital ratio or APRA deems it as being non-viable, then the bank is required to automatically convert the hybrid issue back into ordinary shares. And you could actually end up with less than $100 of ordinary shares.
This is an important point. Subordinated.
Subordinated notes pay a distribution on a fixed date, can have a pretty long maturity date, but in the rankings they qualify fairly low. They don't convert into ordinary shares.
Okay, so they seem pretty complex?
Look, they are complex instruments, Peter, and we always recommend to investors that they really study the prospectus very carefully before they invest. On the screen in front of you, you can see a diagram out of the recent Commonwealth Bank's Pearl 7 issue for its capital note. And it describes where the Pearl 7 security ranks relative to other Commonwealth Bank securities. And you can see, Peter, it ranks just ahead of ordinary shareholders, but behind all other depositors and any other note holders. So if something goes wrong, it's down the bottom.
Paul, where does this fit into the portfolio?
There's a little bit of argument about this, Peter. Some people feel they're more like an equity type, should be treated as part of your equities portfolio. Others, like me, say it's more like part of your fixed income portfolio. I don't treat it as part of equities, Peter, because although there's equities downside risk and they are loss absorbing securities, there's no equities upside risk. So what I do is treat it as part of my fixed income portfolio. It's only a small part, and I make sure I diversify across issuers. So
what's going on in the market, Paul?
Well, there have been 3 new issues in the market in a short space of time, so all that supply has caused a little bit of congestion. And as a result of that and a couple of other factors, prices have dropped and yields have gone up a little bit. So we've had some negativity, Peter, from in the sense of one of the major ratings agencies downgraded a number of hybrid securities, and also the equivalent of ASIC in the UK, it put a ban on the sale of these type of securities to mass retail investors. So we've seen prices come off 2 or 3%, and yields go up a little bit.
So has that created value?
Well, there's a little bit of value there now, Peter, simply because prices have come up and yields have gone up. For example, the ANZ capital note issue, ASX code ANZPE, is now trading at a price of around about $98. It was issued at a spread of 3.25% over the bank bill rate. It's now trading closer to 3.6%. And I think in the market like this, provided we don't get any new supply, there's going to be a little bit of value in the market in the coming weeks.
Yeah, sounds like good insight to me. That's Switzer Super TV for this week. Thanks for joining us.